It's a pleasure to chair this session on the future of sports monetization, a theme that has grown increasingly complex as rights holders grapple with rapidly changing regulatory frameworks, shifting audience behaviors, emerging technologies, and new commercial architectures. From a legal and commercial standpoint, 4 structural transformations are reshaping the industry. The transition from a predominantly avid fan base to a hybrid avid plus casual funnel, requiring more sophisticated engagement strategies, data governance, and value extraction models. The evolution from a sport as a standalone competitive product to a broader sportainment ecosystem where entertainment overlays coexist with the sporting core without compromising integrity or regulatory compliance. The reconfiguration of a traditional revenue verticals venues, media rights, commercial activities, licensing, academies, prize money, memberships, subsidies, and transfers, each under the pressure to innovate, diversify, and scale. The acceleration of multi-club ownership, raising questions of competition, admissibility, governance, harmonization, operational efficiency, and monetization scalability. Our objective today is not merely to identify emerging trends, but to understand how rights holders can monetize them in a manner that is legally robust, strategically defensible, and commercially sustainable. Sultan, chatting with you, you have mentioned that football isn't under-loved, it's under-monetized.
Yeah.
Where do you see the biggest sophistication gap today between European football and the more mature North American leagues?
Yeah, I think the sophistication gap is the opportunity, right? I think lots of long, patient capitals coming into football today, and I think what they're looking at is they're looking at the tremendous unmet potential of these franchises in Europe, right? However, we see structural differences between North American leagues and European football, so we can't really compare them. It's apples and oranges, right? In the US or North American sports, you have a closed loop system, right? Which is conducive to greater investment and greater commercialization. However, I think the operators from North American sports are looking at European franchises and seeing a very interesting opportunity to add that operational efficiency and help commercialize these assets. If we're talking in terms of numbers here, European franchises are at least 20 years behind their North American counterparts when it comes to commercialization, sophistication, operation, even governance, right? If we look at the numbers, North American sports, particularly the NFL, attracts 150 to 200 million fans, right? If I'm being generous. Annual revenues at 20 billion, right? Cumulative franchise values at over 230 billion. And that's a fraction of what European sports do. And the difference there is that you have 4 or 5 billion eyeballs in European football. So it's a facile notion that European football can ultimately capture what North American sports do today, purely because the structural elements that underpin European football are different. But there is a huge gap to monetize those 4 to 5 billion eyeballs in ways that you see in the US. And the primary way is to tap into the flywheel around the IP itself. So the IP or the franchise in Europe is really an anchor tenant within a broader house of content, merch, ticketing, matchday hospitality, real estate. And what you create there is a positive flywheel where you create terminal value appreciation for the franchise, but also a positive flywheel around the franchise itself to ultimately generate more monetization and have that monetization ultimately go on the pitch.
Yeah, and we're increasingly hearing that modern clubs are no longer just teams but platform businesses. In your view, what does a true platform club look like, and which agencies around the IP offer the greatest opportunities for value creation?
Well, I think a platform club is a club that monetizes everything around the 90 minutes, right, without compromising the product on the field during those 90 minutes, right? A platform club today is in many ways a club that is able to tap into the flywheel, the 360 flywheel around the franchise itself today that I just spoke about, but in a way that is conducive to the emotional and cultural contours of football. Again, you can't employ and imprint the NFL model into European football, but what you can do is learn the best practices there and apply them with a football-conscious, fan-centric lens, and ultimately you have a very positive, virtuous circle where your on-pitch performance and your ultimate currency on the pitch, which is winning, feeds into your ability and the depth and breadth in which you can tap into the content, your commercial partnerships, your sponsorships, which create a volatility buffer for the years that you don't make the Champions League, for the years that you don't win the league, right? And have that capital reflected in your P&L to bring you up in years that you don't actually win on the pitch. So you can leverage the opportunity that in football, you own your own IP. So the onus of monetizing and commercializing your IP as opposed to North American sports falls on the operator. So that premise is really the attractive element of what makes European investments attractive to a US-based private equity firm. The likes of Redbird Capital, Arctos, and others are looking at this proposition and saying, you know what, I own my IP, so I own my downside, but I also own my upside. So if I'm able to bring my best practices and implement them in a European context, I can stand out from my peers, because franchises and competitors cannot lean on the league to provide that egalitarian revenue structure we see in a closed-loop league architecture as we see in the US, right? So the gap that you describe is really an opportunity here for these guys to bring in what they do best and implement it with a fan-centric, football-centric lens.
Great. Carlos, how is the influx of long-duration capital from sovereign wealth funds to strategic family offices reshaping modern club ownership? And what differentiates successful operators from passive investors?
Salam alaikum. First of all, thanks for inviting me. It's a great pleasure to be here with Stephen, with Sultan, and yourself. I think that at the end of the day, clubs are companies, not teams, clubs. In a club, in a single club, you can have several type of teams. First team, under 17, under 15, etc., etc., etc. So we need to refer to clubs, not to teams. First of all, as the entity, as the commercial and entrepreneurial entity.
Right.
Then a club, especially a football club, should be managed as any other company, but with a specific difference, which is that there's a lot of fans that have an attachment in their heart to those colors. So, as a matter of example, I've been for 2.5 years member of the board of directors of Deportivo de La Coruña, one of the best clubs, football clubs in Spain. They used to win the football league, Spanish football league, back in 1999-2000, okay? When they used to play at the third division, they still had at least 50,000 members. And I'm pretty much sure that if that is not going to happen, they would play in the fourth division. Still, this is the ceiling. Yeah? Sorry, this is the floor. Now they are 30,000 members playing in the second division because there's a kind of attachment, the colors, and so the kind of new ownership coming from sovereign funds, private equities, investment funds, very affluent person, etc., has to take into consideration two things: that a club, is a company, and should be managed as any other company in the world, in any sector, with some specificities, which means that this attachment that touches your heart. That's basically, and also taking into account that, generally speaking, around 20% of people in the world, they do not like sports. I mean, nobody's perfect. So 25 to 30% of people in the world, generally speaking, they are considered avid fans, the ones that are mainly interested on what's happening on the pitch.
Yep.
Which means that the remaining 50 to 60% of people, they are considered as casual fans.
Yep.
They are also obviously interested on what's happening on the pitch, but they also like everything related and around what's happening on the pitch, but not necessarily on the pitch. We are talking about experiences. We are talking about the before and the after, not only the during. You are talking about not only at the stadium, at the venue, but elsewhere.
Great.
So tackling all these aspects.
On that point, I think, with regards to patient capital coming into European franchises, I think there's an important point to make is that there is a mismatch between the financial lexicon, the financial infrastructure that underpins these investments and the amount of capital that's coming in, right? So equity research is years behind the amount of capital that's coming into European football. Your best bet on valuation is Forbes magazine, and that's an absolute farce, right? On the other hand, why these things trade as a multiple of revenue and not a multiple of cash flow is, I think, a huge fault in the system, right? Especially with the volatility that comes with being in European football, being in the Champions League, facing relegation, a transfer market with no cap. You ultimately face that volatility, but the financial literacy, the financial architecture that underpins European football, I think needs to catch up to the amount of capital that's finding the sports today.
Yeah, exactly.
And one important element are the physical assets, mainly venues. As a matter of example, for example, in Spain, but this is generally in across the world, not in the States, not in Canada. In the first division of the football in Spain, only 50% of clubs, they are the owners of their own stadia. Which means that the remaining 50, they rely on a concession contract with the municipality, which means that you need to deal with politicians. And this is not easy, okay?
Not at all.
And you cannot, capitalize or take advantage of all the opportunities from a monetization perspective because they do not speak the same exact language.
100%.
Yeah, and speaking of European football, Champions League wings, how should sophisticated owners navigate that volatility, and why doesn't the North American model translate cleanly into Europe?
Do you want to have a go at that?
Well, yeah, sure. So the obvious difference of the volatility related to the salary caps in USA, the fact there's no relegation, the fact that they've got more advanced monetization strategies, their audience is one of the wealthiest markets in the world, whereas with the volatility side on Europe, you're looking at a lot of drama, and it makes it quite interesting, but it makes it financially difficult for the clubs to balance that. And the perspective that I bring into that is volatility can be a positive in certain contexts. It's not always a negative. For example, in marketplaces, for let's say, volatility can be turned into an asset. So if there was a way that you could monetize the performance value of sports, which is accessible, fan-created value, and allow people to own that performance value, and that the teams then, because that would be a non-betting model, would have access to being able to participate in the revenue from that industry, whereas they can't participate in a betting industry context. Volatility is what drives Binance revenue, actually. So the more volatility, the more traded, the more revenue. So if you have a different financial architecture, you could see, otherwise there's really no solution. Sultan is talking about, some ways that American companies are coming into European football with some new insights and better monetizations, and that's happening. But the balance is so big and fundamental. You need almost a new revenue source to actually turn that volatility into some sort of positive.
Yeah,
Yeah.
yes. It's
Fabulous. Yeah, look, I think investors are looking at the volatility as an opportunity, actually. I think if you go into European franchises, you have to embrace the
Yeah.
volatility. It's what makes football exciting. We all want to see the underdog defeat the reigning champion, right? We want to
Exactly.
see, you know, a new team make the Champions League. And that's the beauty of the sport. So we can't depart from the ethos of what makes football football, right? But the volatility is precisely what is attracting that long duration capital. Because the volatility is not only on the field, it's off the field. Because you own your own IP. I mean, you're alone, right? So you have the onus of monetizing your IP and the upside that comes with it. So this is good news for a good operator, but really bad news for a bad operator. So football itself, by design, is a filter for the right kind of private equity firm, of ownership group that can come in and be a good steward of the city that they serve, and use their fans as part of their ownership group. Because ultimately, owning a club in Europe is really a public-private partnership, right? And they're on your cap table, they're shareholders, and they're your main constituency. And the currency that you use to repay their love is winning on the field, right? And the more you can win, the more you can buffer for that volatility by tapping into content, merch, attracting the right kind of sponsors. Because without winning on the field, you're not going to be able to create a story worth telling. So the more you win, the more you're going to be able to tap into content, the live event, ticketing, merch, and create this positive flywheel and buffer for the seasons that you don't win. Because inevitably, some years you're not going to win, right?
Yeah.
And fans want to win every single year. So your job as an asset manager is to come into this franchise and say, how can I reduce the amplitude of performance year on year such that I'm showing up, I'm competing, I'm making the Champions League, and that's going to reflect on your P&L.
I would like to add something on Sultan's point, which is very, very important, what you have said in terms of volatility. I would add another concept, which is uncertainty. Certainty or uncertainty, which is absolutely important for investors, as you know. So, European football, as per the European Union law, there is no room for closed leagues. You can organize semi-closed or semi-open leagues, such as the EuroLeague basketball or the League of Legends in Europe, eSports, okay? But not closed leagues. So, as a matter of example, Deportivo de La Coruña, playing in the third division, the maximum that they could make from a media rights perspective was around 300,000 euros, which is more or less 1.2 million SARS, maximum. As soon as you get promoted to the second division, you are making between 5 to 7 million euros, which means more or less 20, 25 million SARS. As soon as you get promoted to the first division, at least you are making, from a media rights perspective, 49 million euros, which means more or less 200 million SARS, up to 150 million or 160 million euros, which means more or less 600 million SARS. That's the upside. But if you acquire a club in the first division and then it happens that is relegated, you divide by 10 the media rights in terms of revenue stream from media rights. And if relegated again, then you are a big, big, big problem.
Yeah.
So certainty or uncertainty as well as volatility.
100%.
Yeah. Stephen, if you had to identify one major underdeveloped frontier in football monetization, the next $1 billion unlock, what would it be and why?
So I think when I look at the sport, there are 4 pillars of monetization from how I see it, and 3 of them are well monetized. The one is television rights, the other one is merchandise, and the other is ticketing. So people's wanting to pay attention to the performance on television, people's wanting to attend the performance in the real world, and then people's want to associate themselves with that brand and the performance through the merchandise. Those are areas that are the 3 pillars that are supporting the current stock value of the team, and the current main revenues of sport is driven from those pillars. There's others, and there's other ways to describe it in terms of IP, but just fundamentally. The area that is blatantly missing is the 4th pillar, which is people's wanting to monetize their knowledge of the performance. And because there's only one model presently that exists for people to do that, which is the betting model. And of course, no sports team can participate in a betting model, and it would be horrifying if they were doing it, and it's even controversial that they even accept a shirt sponsor as from a betting company. So there's $1 trillion a year that goes into that existing model of betting, and I believe the biggest opportunity for those sports would be if there could be an asset-based model, a new financial layer, a participatory economy where fans could own in the value that they're creating in a non-zero-sum fashion, then that could drive the single largest revenue source of all sports, and to me that's kind of the glaring gorilla in the room or the elephant in the room that nobody's really looking at because they don't know how to approach that. That would absolutely transform the sports monetization landscape and make it a lot easier to not have to have perfect models of monetization everywhere else to make up for it.
And given the accelerating shift toward deeper personalization and broader fan segmentation, which structural or technological enablers will be most decisive in capturing the next wave of monetizable demand across global markets?
So, through the technological hurdles, the television rights was enabled from, basically Thomas Edison's invention. So you're looking at a very old now we're looking at internet innovations, which is making digital and IP rights, and blockchain. And blockchain is coming so new and so fast, and it's looking at, $700 trillion of existing assets are being brought over into the blockchain world now. And there's new potential of creating new kinds of assets there. So it's got to be, and the overall trend among people is people want to make money, they want to monetize, but they just need healthy ways. So I think the blockchain and financial architectures that could benefit sport are going to be the future. It's essentially, you could say, transforming data into participatory economics is really an obvious trend that will be great benefit for the sports.
I think if I can opine on that point, I think people focus on one aspect of the value chain or one element of the value chain today. For me, it's not adding or focusing on one aspect of the value chain that impacts the fans. It's really understanding the fan better. I think there is a wide enough attraction of eyeballs in football, particularly. The idea and what's missing is understanding that fans today are not a single monolith, right? They're different tribes. The Gen Z football consumer in KSA is not going to consume the football as a 50-year-old Aston Villa fan, right? And you need to curate your offering around the IP and build terminal value businesses around your IP in a way that's bespoke and segmented and customized to the right eyeballs you want to achieve. Now, if you as a club do that in-house, you're going to provide a greater proposition to sponsors and commercial partners. If you as a company, one that comes to mind is a company we advise, the Althari Group, which is Football Co. They're the biggest football media platform in the world, but they don't use those eyeballs wholesale. They have platforms dedicated to different tribes of audiences through which they're able to deliver higher ROI for brands and also ensure that rights holders deliver for their partners in a way that minimizes waste and increases alpha generation.
Great.
What Sultan has mentioned, which is critical and very, very important, there are actually two sides of the same coin. The demand, the fans, but also the offering, the IP, the right holder.
Yeah.
So they should speak the same language, but also the club to make sure that they position a proposal is targeted to and unique enough in order to be differentiated in comparison to other clubs.
Yeah.
Because if the only thing that you have as a club to offer to your fans is the success on the pitch, at the end of the day, sport is very unfair because only one wins. Only once. One. So you as a club, you need to create an offering, a positional proposal that helps to differentiate yourself from the other, even if on the pitch you are not that successful. As a matter of example, we are advising Easter Flames. Yesterday, we had the president of Miss Easter Flames, here, Madame, on the stage, and she said, Easter Flames, a positional proposal is based on 4 pillars. Football, obviously, because this is actually, and at the end of the day, a football club, not team, club with several teams. 2, education. 3, empowerment of female. And 4, fashion, which is mainly related to female gender. So this is something that even if you are not that successful on the pitch, helps you to differentiate from, to be above the clutter, so to be in a better position to generate more revenues in comparison to the other clubs, because at the end of the day, all clubs are competing, all leagues are competing. Easter Flames is competing against Alula, is competing against Al Hilal, but also it's competing against Real Madrid, FC Barcelona, even Netflix, NBA, for 3 main pillars: time of people, money of people, and attention of people. So you need, as a CEO, or even as an investor, to take into account who are your competitors, not only on the pitch, but globally, for time, money, and attention of your target.
Yeah, excellent. Stephen, if you were to identify a single monetization driver that will define the next 5 years, AI-led content production, immersive venue technology, women's sport, data monetization, global fund pipelines, or multi-club synergies, which would be and why?
So I think, the data monetization into the trend of people wanting to economically participate in something, turning data monetization into financialization and allowing a participatory economic model so people can own the value they created, because the value of all sport is created by the fans' attention at the heart of it, and that without their attention and love, and as you mentioned, there's competing, everybody's competing, but there are also other models that are competing for the same attention and monetization that should be going into the football world. So I think the financialization of data, creating economic models of participation, is the generic trend that is obvious and going to manifest itself over these 5 years.
So, Carlos.
I would say that to really understand the concept of sportainment, which at the end of the day helps you and enables you to reach a broader audience. Audience means consumption, EBITDA, which is the main, the bread and butter of any company. Obviously, if you own your own venue, your own stadium, that's bingo, because you can do a lot of things. Obviously, media rights, sometimes you can do something, sometimes it is centralized, most of times. And this, so you need to cooperate with the league at the end of the day. Commercial, obviously, members, I fully agree with Zutphen. There's a lot of things to do, not only in terms of data, because as for me, data is useless. The great thing about data is the raw material for information and knowledge. And in order to be able to make better and faster decisions, to gather data for the sake of gathering data, as for me, is quite useless. It's information, it's knowledge, etc. Subsidies, obviously. If a government wants to push and boost, for example, female football, they need to pour a lot of money into the system, at least for 5 to 7 years, in order to get traction, right? Transfers. Generally speaking, especially in Europe, but also in Latin, in Asia, 70% of clubs rely on transfer money, period. Yes, funds, yes, venues, yes. But transfer, especially in football, is one of the main key revenue streams. And obviously other. Some clubs and some leagues, NBA, NFL, Barcelona, etc., are investing in startups with the goal in, 5 to 10 years to monetize and sell them, etc. Business, schools related to IP sports, etc. So a vast variety.
Sultan.
I think the next $1 billion in sports is going to be made by winning on the pitch. You know, I wouldn't segment it to a single aspect of the value chain, whether it's AI, data analytics, ticketing, fan merch. I mean, look, ultimately your currency is winning, right? And when you win, you build a story that's compelling enough to export across every aspect of your flywheel. You have compelling content, compelling partners, and you ultimately, what you do when you win in football, which is why I really appreciate the intimacy of the relationship between on-pitch performance and off-pitch revenues in football, which is very unique to European football. That relationship is not as intimate in the NBA or the NFL, right? And that intimacy means that you have to win on the pitch, and you have to have your operational lens premised on that objective. Everything else can flow from that premise. So once you win on the field, you can tap with greater depth and breadth into content, into merch, into ticketing. And what you do really is you tap into the fan funnel. So you convert non-fans into casual fans and casual fans into diehard fans. And the more you go across that funnel, you realize that the lifetime value of each consumer is quite literally a lifetime, which is one of the main characteristics of why sports is such an attractive asset class today. So I know in 50 years' time we're going to have a World Cup, we're going to have a World Series, but I don't know if we're going to be flying planes. And that speaks to the resiliency and durability of this asset, right? So you're going to be able to extract, by winning on the field, a generation of fans that stick with you for 50 and 60 years. And that's a huge monetization upside, right? When we look at the numbers in terms of the durability, only 3 sectors in the US have achieved over 6% growth over the past 25 years. One's education, the other is healthcare, third is sports. And that speaks to how durable this asset is. And I think with the influx of capital we see in sports, we're going to see more professionalization, which is definitely needed in the sport. And these guys understand that owning a club today is one of the very few ways you can have a legal monopoly in any economy. And you have legalistic pricing power, monopolistic pricing power to ultimately monetize that lifetime value over 50 and 60 years. But that entire funnel that I just described begins by winning and building a winning product on the field.
Excellent. Okay. Thank you. Any questions? Okay. I guess we're done.
Fabulous.